Welcome to the daily update, where we'll go over the action in the market today and then see how things look for Tuesday, February 8th. And it was a pretty boring day overall. Really, there was nothing decided. It's what we call an inside day. We didn't, at least in the S&P, we didn't exceed Friday's high or go below Friday's low. And you have a lot of people that are really confused right now. They're not really sure what's happening as far as the growth versus value play. Are we getting ready to see more of a downturn with prices? But yet there's still things in the background that suggest that we could go higher from here. There's a lot of geopolitical events right now with Russia, Ukraine, the Olympics going on, a lot of things going back and forth. And people are kind of confused. By people, I mean investors right now. So there really isn't a lot of conviction one way or the other. So let's look at what happened on Monday. We did have a flat open. I was watching the futures before the market opened. We were down a little bit, came back up, we were positive a little bit. And then by the time we opened, there really wasn't a big change from Friday's close to Monday's open. And we had pretty much sideways action after the open. There wasn't a big buying influx. There wasn't a big selling influx. So there really wasn't any right out of the gate conviction that was going on. As the day went on, prices drifted a little bit higher, a little bit lower. They kind of danced around the 4,500 level on the S&P 500. We saw some late day strength. There was some buying that came into the market, but right before the close, about 30 minutes or so, we saw some selling come in, and we ended up being down on the day after having been up. We ended up closing, it should be down on the slide here. We were down 0.37%. Volume was below average. So this is one of the few days we've seen in a while where the participation has lessened a little bit because you have a lot of confused investors right now. The markets are currently fixated on, yes, there are potentially some improving technicals. Nothing was really settled from Friday's close to Monday's close as far as our indicators. We're kind of showing the same thing. We are still dealing with earnings season. There's still this constant worry about inflation, and that's going to be a big part later in the week. We have the CPI coming out on Thursday, and that's where we get our inflation measurement from. And that's really going to dictate where we go from here, at least in a short-term basis, until the next thing comes out that the market freaks out over. So we're also worried about interest rates and as well as geopolitical concerns. So what can we say after Monday? The market really lacks conviction. It was an inside day, as I mentioned. The market continues to be overvalued on a very long-term basis, but we're still looking positive on a long-term basis. We're seeing a slightly weakening trend, and we're still mixed. That's the conclusion I came to after Friday. Well, it's the same conclusion that I have after Monday, that our bias is mixed, our momentum is mixed, the trend is mixed right now, but we still have a positive backdrop that I'm leaning towards, but you can also point to some negative things as well. So let's look at the day's session. We didn't change much with fear or greed. We're kind of in the middle. And you can see the longer term perspective there. The VIX didn't really do too much. It declined a little bit on Monday and closed just in about the middle. Some of that came because of the late day selling that we saw. As far as the VIX of the VIX, it dropped a little bit on Monday, but not very much. So we're still seeing a lot of fear in the market, which usually could be a good thing, because when there's a lot of fear, that's usually when prices go higher. But because we're not really seeing a conviction and a lot of confusion right now, there's really, at least today, there's really not a lot to say whether we're going to go higher or lower from here. Now, that could all change in Tuesday's session. These things usually don't last for very long. They just come for a day or maybe a few days, and then we get going in one direction or the other. As far as our sectors, we saw communications just getting hammered. They were the weakest sector overall, and we're about split down the middle as far as sectors that were up, sectors that were down. Energy saw another really good day. Even though oil declined on the day, the energy sector still went up, and the financials did fairly well also. These are more of the value plays. Then looking at our overall sectors, since the high set in early January, energy is still doing better than anything else right now, with discretionary still really struggling. As far as inflation, we didn't see much of a change in the BDI on Monday. Our technical alerts, not a lot of movement, so there were not a lot of new alerts that were generated. The NASDAQ did initially go above 14.1, but then near the close, it came back down. The S&P did, it was dancing right along that 4,500 level, but it closed below that. And then the energy sector, which continues to do really well, that sets a 4-year high. As far as our intraday chart, we look at Monday's action. There really wasn't a big change from Friday's close. We went sideways right out of the gate, tried to go up a little bit, came back down, went negative, and then didn't really see a lot of conviction with the selling either. Went a bit sideways. Then this is the late day strength that I was talking about, and we were looking quite a bit better. Not a huge move, but at least positive. But then I guess it was about 45 minutes left. No, 30 minutes left. I'm sorry. Each one of these bars is 10 minutes. But I also look at a lot of 15-minute charts as well. But we can see that there was a trailing off as we went into the close. So we ended down 0.37%. Not a lot of change on our daily chart. You can see this is what I'm talking about with an inside day, where all of the movement on Monday stayed inside of what we saw on Friday. Not necessarily a big deal. These can happen quite often. It just means that there's no real conviction. We still are below the pivot, right around the 4,500 level on the S&P. We're down 6.52% since the all-time high. We saw a little bit of a decline in growth, a little bit of an advance in value on Monday. The NASDAQ 100, it underperformed the S&P because it's very heavily tech weighted. As far as our trend, this is what I say when I'm talking about a weakening trend. The ADX, although it's above 20, it is rolling over and actually starting to go sideways. So if you're more inclined, if you're willing to interpret the ADX in different ways, you might be more disposed to going for some kind of sideways strategy, but realizing that we could break out of that one way or the other. As far as our breadth, we saw a little bit of a advance as far as declines. I know that doesn't make sense, but breadth was negative overall based on price and volume, and we continue to go a little bit lower that way. So the internals are not necessarily strong, and we pay heavy attention to those. The positive backdrop I'll get to a little bit later that I want to show you, where we also switched more over to negative with our advanced decline ratio, where the blue line has now dropped below the red line. New highs and new lows, this is somewhat positive. We saw some new highs generated on Monday, also some new lows, but we're continuing to trend up overall, and our 10-day moving average is also going up. Our accumulation distribution, it's still above the 200-day moving average, even though it declined on Monday. Looking at our short term, the two moving averages are almost coming together, but they are going down. So that is slightly negative, and we remain below both of those moving averages. Our moving average study, we went pretty much sideways to a little bit higher on the 20. We turned up slightly on the 50, and we're kind of going sideways to down on the 200. Our other moving averages just shows that we're above longer term support at the 200-day moving averages, but we're still below shorter term support at the 20 and 50 period moving averages. The MACD continues to be positive. And then our short-term swindling oscillator, it is turning down, both based on price and volume. So that's part of the mixed picture that we're seeing. The McClellan oscillator is slightly below zero, but it turned up slightly on Monday. The Stochc RSI, it's coming off of an overbought reading and kind of not really telling us too much right now. As far as our intermediate term look, we're below the 50. The 50 period exponential moving average has served as overhead resistance, and we've dropped back down from that. If we want to see things turn more positive, we're going to have to break above that. The PMI study, it is negative, but improving. And then based on price and volume, also showing the same thing right now, that they are improving, but still negative. The other PMO study, we're declining a little bit as far as the rising PMOs. We're still going up as far as the buy signals. When we went up a little bit, that generated some new buy signals in and inside the S&P 500, according to this indicator. So that's still looking okay, but we're trailing off with the PMOs that are actually positive right now. The BPI, it went up slightly on Monday. That was, again, some new buy signals were generated, point and figure. Not enough to change our point and figure chart, but this is a little more sensitive, and this is showing that it's a little more positive inside the S&P 500. And that, again, that's why we're getting this mixed picture right now. The moving average rainbow, we're still crossing over on the short-term moving average, and we're right inside the rainbow right now. Stochastic studies went sideways short-term, still going up a bit intermediate term, and turning over a little bit, but still positive longer term. The summation index is going down based on price, but still going up based on volume. How's that for mixed? Our momentum oscillators, some of our more intermediate term oscillators are looking positive. The longer term oscillators are negative, but could be improving. And our short-term oscillators are going sideways now. As far as the different trading systems, we're seeing a mixed picture here as well. With the downward movement on Monday, the bar turned to red, which is negative. But the SAR, the dots continue to be underneath the bars, which is positive. Our different charts, here's the Heiken-Ashi chart, again, just showing that inside day, and it was down overall. So we're really kind of just treading water at this point. Nothing new on the Kegi chart, although it is positive because the line is black. The Renko chart is the same. 3-line break also the same, didn't redraw after Monday. Equi-volume, because we had a down day, there's a red candle, and this initial EMV, just based on one period, it's right in the middle, so it's neutral, and we're still going up slightly with the ease of movement, the 14 period indicator. Point and figure did not change. It's still drawing that there is a potential double top breakout, which could be very positive, but we're just not seeing that in price action yet. And I have a few extra long-term charts. As I'm revamping my weekly video, I wanted to show some of these because it still might be a while before I post a weekly video. This is a long-term chart of the S&P 500 with a 200-day moving average. And this is what I say by a positive backdrop. Yeah, we have fallen and we're down to the 200 or near the 200 period moving average, but the moving average itself is still going up. That's positive. So that's why I say longer term, I'm still more positive on things. Here's another look where we have a weekly chart of the S&P 500 going all the way back to 1990. And here is, again, a 200 period moving average, which is probably too high. So I have another chart, but this is also going higher. So that's quite positive overall. And then here is another weekly chart with a 30 period, or is that a 50 period? It's hard for me to see this. A 50 period moving average, where we're coming down to that, but the 50 period average is still going higher. So you can't dispute the trend. It's still going up. It's just we're in a short-term sideways action without the ADX being sideways, which has produced more confusion. And then another chart showing a weekly calculation based on the 200 period moving average that continues to go up as well. And then another weekly chart. Oh, did I hit the wrong button? I think I'm going the wrong way here. I wanted to go to a monthly chart, but with the 12 period moving average, we are still going up overall. So as far as the broad market, we're going sideways in the S&P. The mid caps continue to go sideways, and the small caps are still in that sideways range that we've been in for over a week now. The FANG stocks, they were down almost 2% because tech kind of got hit heavily on Monday. ARC was down slightly. The Dow, again, we're just going right along the pivot line. There's nobody really willing to take a stand right now. There's a lot of people that'll give you opinions, and the doom and gloomers are just sitting by, just waiting for things to fall apart so that they can declare victory. But then you look at the positive side of things, and you could make a case for things going up from here. Then looking at the small caps, again, we're still just going sideways. Nothing is really being determined right now. Mid caps, again, we're below the pivot. We're in danger of the moving average crossing below, but we continue to tread sideways. NASDAQ, this is where we're seeing a little bit more danger because this is so heavily tech laden. We're below the pivot line. We're seeing the moving average coming down, but we're still going sideways overall. The NASDAQ 100 also treading water, going sideways below the pivot, with the shorter term moving average still declining. The VIXN, it really didn't move all that much. Fear is still pretty high with the NASDAQ 100. So people are still heavily hedged because they don't know what's going to go on. So we want to see this be able to drop if we're going to get into more of a positive environment. If we see things go down from here, then you'll see the VIXN really start to shoot higher. The NYSE also, the last number of days has been going sideways. This is a little more positive. We're still above the 200 period, but we're below the 50. And the 50 is rolling over ever so slightly. Then the Wilshire, below the pivot, moving average rolling over, and below the 200 period. Let's look at some of the broad market. The dollar, which just got hammered last week, we did see a bit of a decline, not very much, but a lot of this is showing last week's weakness when they really saw an increase in the euro because they're taking a more tightening stance in the European Union. And then on the weekly chart, we're just beginning the week now. So we're a little bit below the moving average currently. Oil was down almost 1% on Monday, but still the energy sector went up anyway. Gold continues to go sideways, but it was up almost 0.75% on Monday. Silver also had a pretty good day. It was up 2.31%. So it seems to be bouncing back. But look at all this jumping around, this EKG looking thing here. It's really hard to determine, are we really breaking out? No, look at all these past prices that we're still in the middle of. So You can't really get, if you're a trend trader when it comes to precious metals, you can't get too excited about things, at least yet. CRB saw a bit of a decline on Monday. As far as bonds, we saw a bit of a decline across the board as far as interest rates, except for the 3-month. It had a tick up slightly. So what can we look for on Tuesday? The technicals are still mixed, but we still have that positive backdrop. I'm looking at longer term, much longer term trends as far as that is concerned. And as long as we stay in that environment where the moving averages are still moving up and price is still above those moving averages, we have no choice but to say things are positive. Could it change? Of course it could change, but it hasn't changed yet. And we can only go with what we're seeing right now. The long-term trend is up, but as we're showing in some of our short and intermediate term indicators, there are some signs of weakness. We're seeing it in breadth. We're seeing a decrease in new highs. Those things are warning signs that we look for. We're still in the middle of earnings season. The battle continues between growth and value. There's really no economic reports of significance coming out on Tuesday, so I just left this blank. And then we have the geopolitical events, the Russia-Ukraine. Apparently they could invade any day now, according to the State Department. But we don't know if that's what's really going to happen. And then we have the Olympics, and I haven't been watching them myself. They're pretty difficult to watch when I'm busy or sleeping, but there's a lot of political things happening that way, specifically between China and Russia. So what is our conclusion? We're mixed, just like we were on Friday. The S&P is mixed overall. Short and intermediate term, the bias continues to be mixed, but the long-term trend remains positive, but showing signs of weakness. So thank you very much. I hope you have a very good Tuesday, and I will talk to you again after Tuesday's action.